Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Guys, we're going to go over the fractal pattern because we are tracking to it beautifully. We are approaching some stiff resistance that can be setting up trades for us. But I want to start off with an economic update for you guys because it's been a week since the last video and we had Powell since then. And Powell said a couple of things at his presser. One thing he said was he kind of poked fun at the notion of stagflation, saying he doesn't see the stag, he doesn't see the flation, right? Meaning the inflation. But remember, Powell's very political. This is an election year. The idea is to prop up the market. Remember that the Biden administration, Yellen already said, the Treasury Secretary, former Fed head, said that they're going to borrow $250 billion would they be this quarter? We just paid taxes. They're going to borrow $250 billion this quarter. And then for Q3, they're borrowing $850 billion, right? Keeping us on track to print $1 trillion in new debt every 3 months. Absolutely epic. Of course, the election is when? It's in November. And I had a lot of people on the Discord I've been talking to, people leaving comments in the YouTube, people messaging on X saying things like, how is this possible? Are they stupid? Is this by design? Which side of the argument are you on? I mean, I tend to think it's both. But guys, I want to show you a couple of things. The first thing I want to show you is Jeff Gundlach, the billionaire bond king, right? Talking about inflation. For me, he's kind of taken my role of Scott Minerd. Scott Minerd passed away. Scott Minerd was one of those billionaires that would just tell you what he thought, whether you agree with him or not. And I really do appreciate that. The Ray Dalios, Stan Druckenmillers, Jeremy Grantham, Scott Minerds of the world. And Gundlach's kind of laying it out there too. I want you guys to watch this clip on what his view of inflation is. It's short. We'll come back on the other side.
So that's number two. Number one is the inflation data. That needs to come down. And I don't really have Jay's confidence that the inflation rate is going anywhere close to 2% by the end of 2024 on a year-over-year basis. I don't care what you look at, whether you look at core or super core or PCE. I don't see any of them going to 2% this year.
I mean, on that note, do you take the Fed chair at his word that it's 2% or bust? Or do you think that they'd actually be willing, even though they're not going to say it, to accept a higher target now rather than what the alternative might be, and that is to ruin a good story that they'd like to be able to tell?
I think that he's doing a little sleight of hand with his inflation numbers, as I said earlier. He's making the claim that the inflation rate is in the 2%, 2.7. He cites the PCE, and many other inflation measures are in the 3s or 4s. And you'll remember the 3-month annualized trick that was behind the rhetorical pivot back November 1st. I mean, no one wants to talk about 3 months annualized now because it's not pretty at all. We had CPI come in 0.8 higher in the first quarter on an annualized basis than what was anticipated just 3 months ago. So I think that he's going to have to hike rates unless this transitory lack of progress reverses.
So Jeff Gundlach brought up the fact that part of the reason Powell pivoted last year, end of last year, was everybody on the media. And then the Fed itself was talking about the 3-month annualized, the downtrend in inflation. And like Jeff said, nobody's talking about it now. And guess what? We have CPI coming next week as well. And once again, it's supposed to come in hotter than the Fed's target. Now, the thing is, will it come in hotter but be as expected? Remember, you knowing information about what's happening in the economy doesn't make you a good trader. The herd, The sheep and the sheep in the trading space, the sheep and the media drive the narrative. So knowledge is power, but just be aware, because you know things doesn't make you successful in trading. You have to put yourself in the average person's shoes. And what's the average person? 80% of people trading lose money. So the average person loses money. This is why sometimes you see price go up and you're like, how the hell is that possible? Or price drop and you're like, that makes no sense. The average person loses money, and the professional money managers, 80% of them cannot beat the S&P over 10 years. And this is what they do for a living, and they can't beat the S&P. So the bias is always going to be bullish, guys. It's a sales pitch. You know, you don't go into BMW to buy a car and they're like, why don't you go over to Mercedes? They have better cars. Or you don't go to Porsche and they send you to Mercedes or BMW, right? That's the way this business works. These guys on TV make money off the fees that you pay them when you give them money to invest. So we need to look at the markets, need to understand where everything stands. But, you know, when we talk about these numbers in the economy, this went viral on X over the weekend. So some of you probably already saw this, but I got to share this clip because it was absolutely hilarious. I think there's a film done called Finding Money. So people ask me all the time, you know, is Biden just totally incompetent? We know Yellen's incompetent. She was a Fed head. That's part of the prerequisite for being a Fed head. But is Biden totally incompetent? My answer always is, well, I mean, have you ever heard him speak? Yes. The answer is yes. But what about his economic team, right? They can't possibly think printing and borrowing $1 trillion every 3 months is sustainable. And remembering that it's political, it doesn't matter. They just want to get reelected. But here is the chairman of Biden's economic committee. This guy's in charge of the economic committee that advises the administration. Guys, take a look at this video and we'll come back on the other side. It's a short one, 1 minute.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah, so a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, cause it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
So if you're going to have the chairman of your economic committee, economic council, not understand how the economy works, not understand the function of bonds in the market, not understand and being able to coherently explain what printing money does and how it gets into the system. I mean, it's absolutely incredible. It's an administration of clowns. It is not native to only this administration. Many prior administrations have many people that are incompetent, that are just academics, that never had a job in their real life. And this is who rules us. But worse yet, this is who we vote for, people. People, we vote for these people. Now, I didn't vote for this clown show, but we vote for these people. So you get what you deserve from your politicians. So guys, let's go ahead without further ado. Let's look and see what trades are setting up. Let's go over the charts. We got equities. We got cryptos on deck. I'll give you a bond update. I'll give you a DXY update as well. Lee, let's start the show. All right, everybody. As always, this program is sponsored and brought to you by our two fantastic sponsors, SimpleFX and BingX. If you want to trade these markets, check out our sponsors that help support the program. Guys, if you want to take advantage of our Discord with our community, look in the video description. There is a link there. You can message Lee on Telegram if you have any issues joining. And again, our new website will be launching soon. I'll be making an announcement about it. But if you want a free month, which includes all of our indicators, as well as our TA, our trade signals, our live streams, the special videos I do for the Discord, the staff makes for the Discord, then check it out because it is absolutely free for the first month. Message Lee in the Telegram. Guys, let's go ahead and start off on the 10-year. 10-year, when you look at this, remember, yields put pressure on markets. So does the DXY. What do we have? We have the first wave up, the wave down, wave two. Even if we come up for a lower high, we're still going to come up and make either a lower high or break out to come up and re-challenge that 5% level. Okay, this is all going to play in confluence with the retracement, I believe. A lot of supply this week. We have the 30-year auction this week as well. A lot of people are really nervous about how well that's going to go. So we'll see. Right now, you're holding a base at 4.5. Seems to be a little floor for you right now, unless you can come back up. Put some more pressure on the markets with rising yields here on the 10-year. DXY, same thing. We look at the DXY. We can just take a fib retracement from this leg up to the high here, or I guess this is the high. And where did this fall to? This fell right to the 618, right? Knife below it, came back above it. 618 at 104 spot 887. DXY has a lot of resistance up in this trading range. You can see over here this previous cluster giving us some resistance, but at a bare minimum, just like with the 10-year, you have your wave up, wave down, you're going to come back up. This will put pressure on the markets, regardless of taking out these higher levels here. This will put pressure on the markets coming back up close to that 106 level, into the 106 level, and we can see the next move down for the markets. But let's look at this, because starting off on the baby S&P, the Dow, right? Here's the YM chart, guys. Looking at the Dow, we came right up to the 50. Right now, you challenged it, you hit it, you're getting rejected from it at the moment. We have our eclipse crash cycle. We have our W pattern in the market, right? Our W pattern, and we have the move up from the W. So we can measure this a couple of different ways. We can pull our fib retracement from that fractal high down to the corrective low. You're right at the 50% level, 38,911. Price is 38,878 at the time of this recording. I would like to see this get up to at least the 618 at 39,252 or even above that, but you're being rejected by the 50 right now, because our target from this midpoint of the W, pulling it down to that next low, our target is right up there, 39,379, 39,259. We may get a pullback and then the next move, the final move up before the next leg down in the retracement. Let's go ahead and look at this here on the E-mini for the ES, for the S&P. So this is, you're looking at the candle pump right now, 51.86 as I record this, right? Here's our wave pattern. Been over this, go over the last couple of videos, guys. We talk about this in depth, but we have the S&P, if it comes down for our retracement, coming up to that 58.35, 6,082 level. But we're going to focus on the retracement once again, because this is what we're tracking to. Do you see this? So we've been over this many times, a symmetrical move down and now the pump up, right? And of course, people on TV saying, oh, this is it, new all-time highs incoming. But this is exactly what we did here. Same move down, almost to the candle, almost to the exact percentage point, and now we're moving back up, right? You have to understand wave theory in these markets to be successful trading these markets, because you're going to come to a peak, I believe, and then sell back off. Let's look at this. Here's the lower high scenario. If after we make this retracement, we cannot take out the all-time high, and I have that level at that 52.24. Been over this many times, so I don't want to focus on that too much. I want to look at the retracement, right? So let's look exactly where we are now. You see this? Here's your W pattern. This is the current market price action. Here's your W right now in the marketplace, right? What did we do over here? The July high up to your September high. Look at this. July high sold off. Here's your W pattern. You got your pullback, and then you came back up. This is where you are right now. So you have your W pattern here in the marketplace, and you have your spike up, right? Now, what we did over here was we then pulled back and then accelerated for a slightly higher high. Could see the exact same price action play out. How close is this playing out? Oh, it's playing out really close. If we look at just the retracement level, down here, 16 bars, 22 days, a 6.14% retracement. If we look at it from the S&P and the current price action, a 14 bar, 18 days, 16 bars, 22, 14 bars, 18 days, 6.94%. This fall in the current price was a little bit steeper than the previous one, but you have the exact same pattern printing. So when we look at this from a zoomed in perspective here, we're going to do this on the daily chart as well without all these drawings. But when you look at this, guys, so in other words, I'm saying we'll come up to a level, then we're going to pull back potentially, and then maybe come back up if we complete this cycle in the same time frame within a few days. And this can be May 16th. There's a weekend after that to May 21st. So like a Thursday to a Tuesday is the window I'm looking at for price to come up and make its final top for wave 2, before the wave 3 down. Okay, the bigger wave down here, the same 5-wave pattern that played out in this previous cycle. Okay, we're tracking to it in percentage terms of price movements, and we're tracking to it almost to the candle within a couple candles as well. So is it exact? No, it's not supposed to be exact. Make it really easy to be exact. All of us get really wealthy really quickly if every time we had retracements or pumps, it was to the exact candle, to the exact percentage point. But the pattern is the same. The market is nothing but a series of fractals. Fractals are self-repeating patterns that happen over and over again. So we're going to look at this here on my clean chart. We're right at the 50, getting above it. You're approaching the 618 at 5192. You're at 5185 right now. So what's the situation here, right? What's the current sit rep for this? So if you're looking at this, let's get rid of this ABC, because that's what we're going to be doing, is this double top pattern. Here's your W. You're coming up to your targets. What I'm looking for, guys, is quite simply a box to form right in this space. Let me draw a box for you so you can see this. Right with the 786 down here to the 618. Okay, this is my kill box. I'm looking for a kill box. And when we get into this range, right, this could just be a spike up and then a lot of supply dumped on your candles, something like this. You could see something like this right here. Right? You get up into a range, you get supply dumped on your candle, more than half the candle becomes wick. Or we could come up into this range and form a pattern like a 3-wave double top, a smaller double top, and then exit the range, right? This is my kill box. Whatever plays out in here, we're looking for our PID, our positive identification of a reversal. This is what we're looking for in this range, and then to drop out of it, okay? So it can play out a couple different ways. It could be a spike and it could be a pattern, but that range is 51.92 to 52.84, essentially a $50 range on a $5,200 asset. So this is the area I'm looking for this to play out in our kill box, and we're approaching it. Maybe we get up there tomorrow or the next day and we get this moving into this range and we start making a pattern. Might play out even smoother on a smaller time frame, such as the 8-hour, the 3-hour, the 1-hour, right? But that's the range everybody should be watching. 51.92 up to 52.54. That range. Get our PID, get our reversal, and then exit the range, make the next move down, where you'll be coming down to this area, the 48.41, which is your previous highs, peak FOMO, peak everything on the S&P. And if you look at that, your MFI, again, bearish divergence, starting to get this wave back up, volume momentum still negative. This is your reflexive rebound off of your W pattern. Only getting this information here, guys. Be sure to like and subscribe. Follow me on X. I'll be tweeting out updates to this video this week as well. Let's go ahead and jump over to the NQ. Same exact pattern, guys. NQ is doing the same thing it did previously. Decline, bounce back up, right? Decline, bounce back up. Where's that level? Because trading is all about probabilities, just like the poker table. You want the probabilities in your favor. Doesn't mean it will work out, but if you're putting your money in the middle, you better think that you have the advantage, right? And that's how you view these trades. So let's look at this. This is the blow off top scenario after the retracement down to that 15,885 level or down to the 16,786 level. We're looking at 20,000. We're basically 21,000 or 21,532. And if we look at this, the lower high scenario, this lower high scenario would be the 18,104 level or the slightly higher high, 19,510 after this retracement plays out. But what we want to focus on is the retracement, because just like the S&P, guys, tracking absolutely gorgeous. Look at this, July high down to your October low. 9% drop, 22 bars, 30 days for the first leg. Wave one down, 22 bars, 30 days. 8.5% drop, 20 bars, 29 days within a single day of exact symmetry, within a 0.5% of exact symmetry. And now you have your rebound back up. And guess how you're rebounding? The W pattern on the daily time frame. How are you rebounding? How did you rebound over here? The W pattern on the daily time frame. So I'm not going to beat this to death because this played out the same way as the S&P. You came up to this peak and then you did a slight pullback and then you went up. And right now you're still in that peaking phase. So will we just run up to our targets? We're going to look at that on a clean chart. Or will we hit a target, pull back, and then run up to our target? That's what we're going to look at, guys. But so far, tracking gorgeous. Again, 3-wave pattern. You're looking at this big ABC here on the chart. And we look at the chart, where do we fall to on this retracement? You fell right to your December highs, right? Look at that, right to the fractal. December highs bounced up. Here's your W pattern. You can clearly see on NQ, the NASDAQ here, your W pattern, and price is trying to accelerate back to the upside. Where is it going to find that resistance? We're going to measure this the same way. Pull a fib down from the all-time high. You're right at the 618, 18,099. You're at 18,112 time this recording. That's the 50 you're slamming into right now. Where's our kill box in this situation? It's the exact same situation as we have on the S&P. We're looking at the 618 to the 786, so 18,099 to 18,367. We're looking for a pattern to form right in this range or give us a nice juicy spiky candle up and then drop back off with some selling pressure just like this, right? A spike up into this area that will reverse, but it'd be a lot cleaner if we get a nice little double top on a smaller time frame or even better on a daily time frame. We're in the zone, guys. We have entered the zone now for the kill box. We'll be looking for our PID, our positive identification, for a incoming reversal. We need some candle action in the zone. Then we'll get that PID and then we'll look for that reversal and the next wave down. So that's what we're tracking on the NQ. What's the indicators looking like on the NQ? Just creeping up above the median line here, as you can see, the steady decline in the MFI, still bearish overall, and the decline here on the MFI from your December high. You can see this. So you're just making these lower highs and you have price rising back up, looking for our reversal, guys. Volume momentum also negative as well. We look at Bitcoin, covered this pattern multiple times, 3 peaks in a domed house. Peak 1, peak 2, peak 3, 5-wave pattern for the domed house would take you to 110, but this would call for our retracement down to 52. We got down to 57 or 58, or our retracement down to that 45, 46K area, putting you back in this candle range and this candle range as well, okay? Then if we hold, explosive move back up, obviously, and then we're going to be on our way to that 110 area on Bitcoin if everything plays out for a blow off top. If it does not, you have the Gann market pattern, which is nothing more than a 3-wave pattern, law of 3 pattern. Big move up. This was Bitcoin's previous top. Sell off. Big move back up. Took out the previous high. And then what happened, guys? 75% decline. Okay. So that could play out this way as well. So we can have our big move up in this pattern. If we get the lower high scenario, we sell off, come down to this 46, 45K level, whatever. we come up and let's say we get to 83,450, right? Assuming we retrace down to that 45K level, 83,450, mimicking this exact same pattern, still taking out your all-time high, but then you get your decline, and that's the end of the cycle. So we have to see, because we have to see what happens with Bitcoin. We have the blow off top scenarios for the equities, for the cryptos as well, and then we have the lower high scenarios for the equities and for the cryptos as well. We look at Bitcoin on the daily chart, fractal corridors. Remember I told you, my neutral territory here, you want to coil in this range, bullish bias up in this range, bearish bias in this range, and you're in the bearish bias range now. When you zoom out at this, though, and you look at this, again, this to me, if we come up, right, as the markets are moving up to the retracement level, Bitcoin could get stuck here at the 50, could come slightly above, but this to me would be nothing more than a giant three-wave pattern if this ends up retracing with the markets on the next leg down, which I believe it will. So let's look at some Fibonacci retracements in this area as well, see how this is setting up. Pull a fib from our all-time high down to the low. You're getting rejected right at the 50%, 65,181. So the next level, if you can get above this, you have the 50 right there. The next level, you want to look at 67,225, between 67,225 and 70,136. That range right here will be a strong resistance range if Bitcoin comes back up into this area, because this is where previous price action also topped out. You have to get through all these clusters of candles. So this is what you want to see as the markets push up to their top, okay? Can Bitcoin come up higher into this range? If not, then you might be stuck here. But I think it can come up some more and at least challenge the 618 at 67,225. What do the indicators look like here? Looking at the MFI, you can see just steady decline, but it's just, you see it in the price action too. So you have this tilt down in price. Price can make this move back up to the upside. So watch those upside levels. If we look at Solana, same thing. Look at this. You almost have this inverted pattern, right? So we have our three-wave double top up here to the 210, down and then back up. Here is our epic short for the 45% drop. And now you have the inverse of this pattern down here as well, right? So here's your double bottom, your W structure. You have your M structure for the double top, your W structure for the bottom. You need to take out this fractal right here, get above 160, and then you got to come back up and challenge 173. I want to see Solana get the 173 to 189 for peak levels of resistance, where all these candles were in this fractal corridor here. Love to see Solana be able to get up here and struggle in this range, make us another pattern, make us another three-wave double top or another tradable pattern that we can get for the next move down if the retracement cycle continues to play out. What about Ethereum? Ethereum's still in the same fractal corridor here, 3275 and 2800. It's stuck in this range. But just like everything else, guys, I've been showing you this over and over. This can easily just play out to be yet another three-wave move. Here's your A. This would be your wave 2. If we come back up for that lower high scenario, I want to watch 618 at 3600, 786 at 3817 as the markets do their wave up, and then you can get your further decline. Want to see a pattern printed in this area, okay? Give us our kill box area with a pattern. Right now, you're just going sideways. Indicators are doing nothing. They're flat, chopping up and down. Momentum's chopping up and down. MFI's chopping up and down. What about NEAR? I was requested to put NEAR on here. Big drop. NEAR's $7 and $7.28 right now. So to me, I see a couple of patterns forming here. I mean, you're going to have a lot of people on YouTube that just understand basic patterns. They're going to look at this like a cup and handle, right? So you have a cup and handle forming, but I also see three waves to a top, right? So you have your wave 1 off the bottom, your wave 2. This is a topping structure, which makes sense because the markets are in topping structures. If this breaks down again and comes back down to support, then you're going to get your wave 3, right? Your final wave, 3 waves to a top. So let's see if we can assess where this would be on NEAR. First of all, let's look and see where this could break down to, because this is a deep retracement you already had, but you're running into a lot of resistance. So if we look at NEAR from this fractal high of $9.02 down to that retracement low, you're stuck right at that $7.61, the 707. Just above it is $8 essentially, $7.99. So you want to watch NEAR in this range. Where can this retrace to? Well, look, I mean, you can look at this from a fractal perspective. This fractal high here from December, where'd you fall to? You fell right to the fractal high of December, bounced right back up. Look at this from a Fibonacci perspective. We can take that low up to that high. You fell beneath the 618, got back above the 618 at $4.95. So if you want more upside in near and the retracement cycles don't play out, you got to take out $9 and move up. Right now you're coiling, but you can see the 3-wave pattern that you've already printed here on near. So this is something you should pay attention to because you have this giant 3-wave pattern right now on a daily. And this is a big time frame to be looking at this, but you could have more upside as the markets inch up higher for these tops for the second wave. Okay, so just watch these levels here on near. Let's move forward. Apple did our 3-wave pattern, came right down to the neckline 165. What did it do off that fractal low? The news came out about Apple having a record buyback of shares, got a euphoric spike back up. Where did that spike go on Apple? One of the 3 largest stocks still, guys, went right to the 618 at 186, and now it came down to 182 and change, right? So again, Apple, big tech, Mag 7, you want to watch these stocks to see how the market's performing. Apple overall, I think is going to be weak. And you have this 3-wave pattern, which could easily be a 5-wave pattern now because now you had your descent to your neckline, you move back up, which failed. And then if this starts chopping around, making a double top or something, you'll see this come down for the next leg, okay? So you want to watch Apple as well. Tesla, we've been covering this pretty extensively, but Tesla came down to our fractal low here of 152, got just beneath it, got down to the 786 fib, bounced back up. You want more upside in Tesla, you got to get above 205 to get back in this area of this big cluster of resistance up here, okay? So you want Tesla to stay above 177. It's at 182 right now. Nothing really to report. It's still stuck between that 205 and 177 range. So I'll keep you updated on that. The next leg down, if Tesla moves with the market after they top out for the next leg retracement, you want to see if you can hold that 144. If not, you're coming back down into that range between 100 and 140 bucks, guys. So we'll drill into that if that move occurs. Looking at the FTSE, it is on a holiday today. So that's the FTSE's on a holiday. I want to show you this because it's been in this long accumulation range and we just had a breakout, right? We just got a breakout from this long accumulation range. And if we can just measure this with Fibonacci, expansionary move, look at this breakout leg right to the 1618, 82.55. Got some selling pressure there. We'll see what happens when the market opens, if it's going to start making a tradable pattern in this range, or if it has some more acceleration to do, move towards that 83.70 perhaps, okay? But we'll be watching the FTSE as well. Let's go ahead and look at the DAX. DAX 3-wave pattern. It needs to break to 618 at 18,365. You're 18,325. You've tried multiple times, failed, made a double top, came back to your neckline. Now you're pumping back up with the US markets. I like the DAX up at 18,572. Slightly higher if it can break out to this level. If the US market's coming up for a wave 2 peak, if we can get up to that level, I like that level for a trade because I can minimize my risk and put my stop just above the all-time high in the DAX and see if I can get my kill box to form and get a tradable shape in this pattern for the next move down. And then you need to take out 17,604 to get a deeper retracement at that level. Let's look at the Paris market real quick. Paris market, same as the DAX, guys, same as the US markets. Rebounding, having some difficulty. 618 at 8109. You want to see this move up. The 50 is right there at 80.58. We'll see if the Paris market can at least get up to the 50% retracement. 8109 is a 618. A better target to look for resistance. And of course, gold, we've covered this extensively, but it's moving with the S&P as we talked about. Our gold accumulation range, did a deep dive on this in the Discord. We talked about this, I guess, a video or two ago as well on this channel. We got to the 1618, 2361. You see the spike up, the sell-off, and now we're trying to come back up. We're at 23.26. We'll see if gold can cross this, but guys, I expect this. I've laid this over many times. I'm not going to do it again, but I expect gold to track with the S&P because it's been tracking with the S&P absolutely beautiful. Okay. Now, if I want further confluence, I can do a fib projection on gold as well to get this confluence. So if we take a fib projection up here from that 2077 level down, right? We can come down to our low here in the low in the range on gold. And look at that. Your 1618s, your two fibs lined up on top of each other. So if gold tracks with the S&P, again, you want to hold that range, that 2200, 2150 level. If you can't hold this range, because I think you're going to do this type of move, make a three-wave double top. If you can't hold this range, you're coming back down to the ceiling, that 2000, 2050 level. So you want to try to hold up in this range for gold. And this is going to move as it has been with the S&P. All right, guys, hope you enjoyed the video. Leave me your questions, comments. As always, I will reply. Check out our Discord. Be sure to like and subscribe and give us a follow on X. Talk to you guys on the next transmission.